Good morning, folks. Happy Sunday. We got a lot of charts to look at, so let's get going. This is gold in the monthly time frame. Nothing really new to report here. We've still got this continuation pattern building. Expectation is that when gold finishes this consolidation and breaks higher, it will take price up into the 2350, 2400 range, and expectation that that will occur before the end of 2022. Here in the weekly time frame, nice bullish candle last week. Look at that long lower tail. That's a bullish indication. Found support on the 40-week moving average, moved higher from there. MACD still in bull mode, suggesting primary trend is to the upside. Looks like MACD's trying to curl towards the upside again. Energy rising but very low. So positive indication here in a weekly time frame. That's a nice bullish candle. And notice the prior week is a doji. Dojis are always indicative of elevated energy. So nice action there in weekly. 10-week moving average as resistance overhead. Down in the daily time frame. Now this was really nice to see Friday. I was real excited about this Friday. Despite the dollar shooting higher, which we'll look at, and the equity markets dumping about 2.5% to 3%, gold did a very nice, strong day. And so notice how price came down and tapped the median line of this modified shift pitchfork, found support there and bounced, and then also found support at the 200 moving day average and playing with the 20-day moving average in there as well. But that is a very bullish candle, nice action, and again, especially nice in light of the other markets and how they were playing out Friday. MACD is in bear mode, but on a buy signal and headed higher. Notice that MACD histogram strengthened on Friday with the going from light green to dark green. Energy is very elevated at this point. So gold is poised to move higher, certainly. Oh, and then also on Friday, interest rates moved higher across the board. And again, they were up 3% in most of the time frames, most of the durations, I should say, 1 year, 2 year, 5 year, etc. Here we have silver in the weekly time frame. Silver just not catching a bid. Of course, it's always the more volatile of the two precious metals. I don't worry too much about silver. It will follow gold in good time. Silver in the daily time frame, nice action at the daily level. Notice we tapped this. This is the first median line extension of this modified shift This is the first median line extension of this modified shift pitchfork. Price tapped that level for support. Also the horizontal support level. Got a nice bounce, long lower tail on that candle. Looks like we found resistance at the 20-day moving average. MACD rolling over like silver wants to go lower again. Energy dropping off of its elevated level. So mining stocks here in the monthly time frame, not much to see. Continuation, prices gathering energy underneath the upper boundary of this downward sloping channel. Energy is low. MACD is on a sell signal and flirting with dropping back into bear mode. For now, it's still in bull mode. In the weekly time frame, nice candle last week, nice long lower tail on this. Wouldn't quite call that a doji. We might call that a bullish hammer. Anyway, that's a bullish candlestick, followed or preceded by two. That doji found support. Anyway, positive action in the weekly time frame. GDXJ, this is my proxy for the mining stocks. Of course, we've got a lot of resistance overhead, both of the moving averages, 10-week and 40-week, and then the upper median line of this modified shift pitchfork. So A lot of resistance overhead. MACD dropping into bear mode on a sell signal. Energy is low. In the daily time frame, very nice action on Friday. And again, with the equity markets dropping 2.5 to 3%, GDXJ put in, that's a 4.7% gain. So, and off of a support level. So very nice action in the mining stocks on Friday. Pushing into resistance, this is a horizontal support resistance level. I'd call that minor, although obviously it managed to stop price on Friday. And of course, we've got the 20-day moving average in there as well. MACD is in bear mode on a buy signal. Energy moving up into the elevated range. So nice action there in the mining stocks. This is the dollar in the monthly time frame, pushing up into that double top, and I'm expecting the dollar to push right through that, head on to new highs. MACD in bull mode on a buy signal, energy super elevated. So dollar is heading higher. If you haven't had a chance to look at it yet, I did a video last week where I looked at all of the currencies, all 6 of the currencies that make up the basket of currencies in the US dollar index. And so a lot of analysis in that video of why the US dollar is so strong. And in my expectation, it will continue to be strong for quite some time to come. Here in the weekly time frame, again, big bullish bar last week. MACD in bull mode on a buy signal, energy very elevated, price finding support along the 10-week moving average, pushing into this resistance zone. Here in the daily time frame, more of the same, pushing into resistance. MACD, we got a new buy signal on Friday. MACD is in bull mode. Energy is elevated. So again, I'm expecting the US dollar to head higher. Now I'm working on another video I haven't published yet, and so I was looking at some longer term charts. And this is the first time I'd looked at TNX. This is the yield on the 10-year note in the monthly time frame and a long-term chart. And so notice that we have in this downward sloping channel, that's 30 full years of downward action, lowering of interest rates. Well, that's what's significant in my mind. We've got a breakout. And I don't think that that's not a fluke. That's not just an overthrow to the upside and then it's going to pull back down. I believe that that is a legitimate breakout. Now, I just noticed what will give it even more credence is if or when interest rates push up through that prior high there. Then that will be a further indication that this is a legitimate breakout. Also noticed when I was looking at this chart, the last time we had a trend, an upward trend in interest rates, it lasted for 18 years. And it occurred during economic conditions that were very similar today. Inflation, stagnant economy. That's exactly what we have today, folks. High inflation, stagnant economy. Call it stagflation if you want. People are just barely accepting inflation. Oh, and if you caught the CPI report on Friday, it came in hotter than expected. And anybody who thought that or believed what the talking heads were saying, you know, interest rates have peaked and now they're backing off, well, BS. And the CPI report on Friday pretty well killed that idea. So anyway, I believe this is a breakout. Interest rates are heading higher, likely to do so for years to come. And of course, that's not a good thing for the financial markets. Stocks aren't going to bear well in a rising interest rate environment. Real estate certainly not going to do well with interest rates rising. I think we're expecting a at least a half point or 3/4 of a point rise at the next FOMC meeting, which will, there's a delay before rising interest rates affect the mortgage markets, but throw another half point or 3/4 of a point on a 30-year mortgage, and we're pushing 7%. And it was less than a year ago, we were down, 3-4%. And so, almost a doubling of mortgage rates in a year. Tremendous headwind for the real estate markets. Here in the weekly time frame, again, yield on the 10-year note, big bullish bar last week, MACD in bull mode on a buy signal, energy is elevated. I expect interest rates to head higher. This is one of the markets that was nice. I enjoyed looking at this market on Friday. As gold was surging higher, we had both of the standard headwinds for gold, the US dollar and interest rates. They were both headed higher, and despite that, gold still shot higher, and the mining stocks along with it. So here, yield on the 10-year note, daily time frame, big bullish bar on Friday, found support on the 20-day moving average, and this is the second median line extension of this modified shift pitchfork. MACD in bull mode on a buy signal, energy very elevated. Interest rates are headed higher, folks. This is, again, I was looking at long-term charts yesterday. I don't often look at the equity markets in the monthly time frame, and certainly not a long time frame. What we're looking at here is a potential bubble. And so the current stock market could easily be in a bubble. One of the truisms of financial markets is that when a financial bubble pops, it always, and I'm saying always intentionally, never say never, but I'm using the word always intentionally. Financial bubbles always fully retrace the bubble portion of their move, going all the way back to the tulip bubble in the 1600s. You can look at the John Law bubble, which I think is the same thing as the Mississippi bubble. Any number of bubbles that we can talk at, any number of financial bubbles that we can look at, and all of them fully retraced the bubble phase of the market when the bubble popped. And so I was asking myself, when I was looking at this chart, I was asking myself, it's like, okay, if this bubble pops, where does it start? Well, you have to decide, where did the bubble phase of the stock market begin? Now, a lot of people point at this was the end of the 2008 financial crisis. A lot of analysts suggest that this was the start of the bubble phase, which would suggest that all of this stock market upward movement, all of that is bubble that will be retraced. I go back to the popping of the dot-com bubble. That was 1999, 2000. In my opinion, everything that has happened financially since the popping of the dot-com bubble, all of it's bubbles. It's been a series of bubbles blown by the central banks on planet Earth. We've had stock market bubbles, housing bubbles, just a series of bubbles. In our current environment, analysts refer to the everything bubble. Everything is in a bubble right now, of course, except the precious metals, silver and gold. Stock markets, bond markets, they're all in bubble territory. Real estate markets, all of it. And so anyway, when I looked for support, it's like, okay, when the bubble pops, where is it gonna land? That's one question. And then another question is, as the bubble is deflating, where might we find support? And so I looked for, this is true, this is always what I look for in horizontal support. I want to see where price tests a level as resistance, breaks through that level, and then retests it as support. And so that's exactly what we see here. Resistance, pullback, breakthrough, test for support, on to higher markets. And so reasonable to expect that we'll find support at this level. Of course, that's another 16% lower. We're at 3,900 as of the close Friday, 3,250, that's another 16% drop. If that level doesn't hold, or when that level is broken, we come down here, 2,200, again, resistance, 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 broke through, didn't really test it as support until we got all the way back to March of 2020. And of course, this is the big scary plunge. And so I'm hesitant to really call this a support level, but I wanted to be consistent in my methodology. I wanted to identify all of the levels where price had tested resistance and then tested the level as support. That would represent a 44% decline. That's 2,200. This is back to the 2000 dot-com bubble. That was 1,600. That would represent a 70% decline. We did get a little bit of a test as support in here, but then, price was off to the races. So we really haven't tested the 1,600 level as support, but it is there. So that's the S&P 500 in the monthly time frame. And again, this is for a video that I'll publish today or tomorrow. Let's drop down to the daily time frame, S&P 500, just ugly, ugly action on Friday. So we'd already rolled over on Thursday and dropped below the 20-day moving average, which could have acted as support. And then on Friday, we opened with a big gap and then just dropped lower all day. When you start looking at gaps, there are several types of gaps. In my estimation, my opinion, this is the first gap in a series of runaway gaps. And so runaway gaps are just what they sound like. It's when price runs away in whatever direction it's headed. Obviously, in this case, it's to the downside. Now, one of the reasons I'm confident in calling this a runaway gap, look at this price bar on Thursday. Price closed almost on the low of the day. That's always a bearish indication. This is a relatively large price bar. I wouldn't go so far as to call it a wide-ranging price bar. Wide-ranging price bars, if we just back up, take the 10,000-foot view of a price chart, notice we got a bunch of these little bars, and then, there's some medium-sized bars. But then there are a few standouts, like we could call that a wide-ranging bar, that's a wide-ranging bar, there's a wide-ranging bar. So wide-ranging bars are indicative of elevated energy. There's a wide-ranging bar. So these don't quite qualify as wide-ranging bars, but they're certainly elevated energy with price closing near the low. Again, that's what happened on Friday. We plunged through support at the upper median line of this shift pitchfork. Price closed almost on the low. It's 5 points off the low of the day. MACD is in bear mode, which obviously suggests that the primary trend is to the downside. Energy is down in the tank, very low. And so unless there is something bullish that happens today, some reason that we can pump the markets up tomorrow, I would expect a continuation of this downtrend. This is the Dow. I haven't finished my analysis on this chart, but I wanted to do the same thing I did in SPX monthly chart, identify all of the potential support levels where price tested resistance and then tested support. And so in the Dow, we've got a potential support level just a little bit lower from the current action. And you can see it here. I don't need to go through it. MACD is in bull mode, but we have a new sell signal and clearly headed downwards. Energy is very low. Dow in the daily time frame, very similar to SPX. On Thursday, we got a big drop, a push down through the 20-day moving average, price closing near the low, gap lower on Friday open, big bar to the downside, price closing very near the low, energy very, very low, down in the tank. Yep, new sell signal on Friday. So we've got a new sell signal in the daily time frame of the Dow, MACD in bear mode. Just not pretty action in the equity markets. Here's the NASDAQ in the monthly time frame. Same thing, looking for levels where we got tests of resistance, test of support. Of course, in the NASDAQ, we've already pushed through that potential support level. Price closing near the low of the bar. Some other potential support. I noticed that of the three equity markets, this is the one that most looks like a parabolic curve. And of course, parabolic markets, there's another truism. When markets go parabolic, they always fail. And when a parabolic price move fails, the downside is dramatic. And so whenever the NASDAQ breaks through this parabolic uptrend, the downside is likely to be substantial. So that's NASDAQ in the monthly. NASDAQ in the daily time frame, just more of the same. You know, we got the break on Thursday, gapped lower on the open Friday. Price closed near the low of the bar on Friday. MACD rolling over. We don't have a sell signal yet, but MACD in bear mode. Primary trend is to the downside. Energy very low and headed lower. So just not a good time to be in the equity markets. Energy prices, of course, this is another factor that is affecting the financial markets. Elevated energy prices, whether you look at a barrel of oil, gallon of diesel fuel, gallon of gasoline, natural gas, all energy markets are headed higher. And of course, that dramatically affects the entire economy. We're currently at $122 a barrel. Next price target based on the monthly time frame is $140 a barrel. Fully expect us to get to that level. Just a big headwind for the global economies, these rising energy prices. Got a couple of got a couple of crypto charts. This is Celsius against the US dollar. We're in the weekly time frame. 91.7% loss in 12 months. So how'd you like to be invested in Celsius? You lost 90% of your money in a year. That's no fun. Price is bumping along the lower median line of this modified shift pitchfork. MACD is in bear mode on a sell signal. Energy super low. So that's Celsius. Let's look at Bitcoin. This is Bitcoin in the weekly time frame. Just not finding a bid. Dealing with resistance in this support resistance zone. We've got resistance at the upper median line of this shift pitchfork. Big bar selling volume last week. MACD in bear mode on a sell signal. Energy very low. Another week of the crypto shills out there writing articles about all the reasons why crypto is the latest and greatest thing. Noticed a new trend this week, I believe is a new trend. The major banks are coming out and saying, oh, we need to back, the crypto ETFs and the crypto future markets. Well, of course, the central banks aren't stupid. They realize that when the crypto bubble fully pops, people are going to be disillusioned. What you find if you go study financial bubbles, and I have, when a bubble pops, it takes at least a full generation, so 15 or 20 years, before the mass of the population will return to whichever market it was that bubbled and popped. And so I suspect that the central banks at this point, they're realizing that if they allow the crypto bubble to fully pop, they aren't going to have any luck introducing their own digital currencies, which of course, that's exactly where we're headed. They're going to come out with their own digital currencies, yet to be determined whether they just take over or support the existing crypto, or whether they, do away with existing crypto and introduce their own. But anyway, the central banks are going to try to introduce their own digital currencies. And again, if the crypto bubble pops, they're going to have a tough row to hoe with their digital currency. Here's Bitcoin in the daily time frame. Again, just unable to catch a bid, dealing with support and resistance along the 20-day moving average. This is a support resistance zone. A lot of selling volume. MACD in bear mode on a buy signal. Energy low and headed lower. One last crypto chart. This is Ethereum, which is in the weekly time frame. Ethereum is the second largest token by market cap. And we can see here that Ethereum is not faring well right now, pushed through potential support at the median line of this modified pitchfork, and then finding resistance under the median line. And we can see that just, what's that, 1, 2, 3, 4, got 4 weeks in a row where price has tested that median line for resistance. And then last week, we got a big push to the downside. Got a little bit of a bounce off of this support resistance level. MACD in bear mode on a sell signal, energy very low, sell volume picking up. So crypto market's not looking good. That's all the charts I got for you this morning, folks. Video went a little bit long. Have a fantastic week. I will talk to you soon.